Remember when you first thought about buying a house and all anyone would talk about was interest rates? Yeah, me too. Well, today we're diving into something that probably, like, already affected your bank account in some way, the Fed cutting interest rates again. And get this, it wasn't just a little cut. It was a huge cut that has everybody talking.
Yeah, this rate cut definitely got people's attention, but before we all freak out, let's break down what it actually means for you.
Okay, so let's talk about interest rates. I get that the Fed cuts them to try and, help the economy, but how does that work?
Mm.
Like in real life?
Okay, so imagine the economy is like a car, right? When the Fed cuts interest rates, it's kind of like hitting the gas pedal, trying to speed things up. Lower rates mean it costs less to borrow money, so businesses are more likely to invest, expand, hire more people, all that. It also means that just keeping your money in savings isn't that great.
So it's like giving everybody a nudge to spend money and invest to get the economy going.
Exactly. Think about it. If you knew loans were super cheap right now, you might finally start that business you've always talked about, or even buy a new car. And if savings accounts aren't paying much, you're more likely to invest that money to try and earn something.
Right. Who wants to see their money just sitting there when it could be out there making more money?
Yeah.
This last cut, though, was a big one, right? Like a 50 basis point drop is not a small deal, is it?
Yeah, a 50 basis point cut is pretty big. To put it another way, it's like the Fed slammed on the gas pedal instead of just, easing onto it.
Hmm.
And yeah, people are comparing it to rate cuts we saw back in 2001 and 2007 during times when, well, things weren't so certain.
See, now those comparisons kind of make me nervous. Nobody wants to go through those economic roller coasters again. Should we be worried? Should we be getting ready for things to get bad?
It makes sense to be a little worried when you see such a big change, but you have to remember why the Fed is doing this. Their job is to keep the economy healthy, which means keeping inflation under control, making sure people have jobs, and making sure things are generally stable. Think of it like going to the doctor for a checkup. The Fed's just trying to keep things running smoothly.
So it's more like a preventative thing, not a sign that everything's about to fall apart.
Exactly. They're trying to prevent things from getting worse. And remember how you mentioned that the Fed wants to maximize employment? They're not going to risk everyone's jobs with some crazy move.
Okay, that makes me feel better. But this rate cut definitely has investors looking for safer places to put their money, maybe even places where they can still make some money during all this uncertainty. Speaking of, I saw this thing in the reader. It's called monetary metals. Have you heard of that?
Yeah. It's really interesting, actually. It's like a new development in how people invest in precious metals.
It sounds too good to be true. You can earn interest on things like gold and silver.
Yeah.
I always thought they were more like, I don't know, insurance. Like you have them just in case the economy tanks, but they don't really earn you anything.
That's how it used to be. But companies like Monetary Metals are changing that. They're giving investors a way to earn, well, a yield on their gold and silver. And get this, that yield is paid out in more gold or silver.
Wait, so you're basically getting paid in gold and silver? That's crazy. How does that even work?
Yeah, so basically they use your gold and silver to back up businesses in their network, and then those businesses pay you back with more gold and silver.
So you're actually putting your gold to work instead of it just doing nothing. I like it.
Yeah.
But what about the numbers? What kind of returns are we talking?
Okay, so this is a really interesting part. For regular investors, it's about 5%. But for accredited investors, it can be up to 12%.
12%. Whoa, that's way better than my savings account right now, especially after this rate cut. With interest rates going down like this, it seems like this monetary metals thing could be a big deal for people who want to make more money from their gold and silver. It's like, you hear about finding diamonds in the rough. This is like finding gold and all this. Yeah, you get it.
It's definitely something to think about, especially if you're worried about inflation, making your cash worth less over time.
Speaking of things to worry about, the stuff you sent over mentioned that the job market might not be as good as people are saying. What's really going on there?
Yeah, that's a really good point. You always hear about how many jobs were added or lost each month, but it's not always that simple.
Okay, so what are we missing?
Well, they usually talk about non-farm payroll data, but that number can be misleading because it's counting jobs, not people.
So if someone works two part-time jobs, that's counted twice.
Exactly. So it can seem like things are better than they really are.
Gotcha. So if those job numbers aren't the whole story, how can we tell if the job market is actually doing well?
The research you sent mentioned looking at something called withheld taxes. Since taxes come out of your paycheck, it's a better way to see how many people are actually working.
Right. That makes sense. So what are those withheld taxes telling us about jobs that maybe those other numbers aren't?
It looks like jobs are increasing, but more slowly than those big headlines would have you believe. It might mean things in the job market aren't as amazing as some people think.
Interesting. So we've got this kind of confusing situation with jobs here in the U.S., but it's not just stuff happening here, right? Like, that research mentioned some risky situations in other parts of the world that have me a little concerned. Especially in the Middle East, it feels like things could blow up at any minute.
For sure, whenever things are unstable around the world, it makes investors nervous because it's hard to know what's going to happen. And the article mentioned that things in Lebanon could get worse, and that's definitely something to keep an eye on.
Okay, so for those of us who aren't, like, experts on other countries, why does something happening in Lebanon even matter for our money here?
Well, everything's connected. When investors get worried, they look for the safest places to put their money, like we were talking about earlier with gold or U.S. Treasury bonds.
You're saying something happening on the other side of the world can mess with my investments?
Pretty much. And it's not just the economics of it either. Remember the article mentioned Netanyahu. These events can change what politicians decide to do, which can have big economic impacts. It's like one thing leads to another, and so on.
Okay, yeah, that is kind of unsettling. Speaking of political stuff, can we please talk about the debt ceiling? It seems like that's always about to be a problem. Like, what even is the debt ceiling, and why should I care?
Sure, basically the debt ceiling is like a limit on how much money our government can borrow. And we're getting close to that limit, which means the Treasury has to figure out some creative ways to keep the country running.
Creative ways. That doesn't sound good. It sounds like they're playing with fire.
Huh? Yeah, kinda. But really, when the government's close to hitting the debt ceiling, it makes investors unsure about things.
I can see that. But how does this whole debt ceiling thing actually impact stuff like interest rates and investing? So we've got this debt ceiling thing happening, and it's making investors nervous. How does that actually, like impact things like interest rates and investing and stuff?
Okay, so imagine this. You're trying to buy a TV, right? But like, everyone in town wants the same TV. What happens?
The price goes up.
Exactly. And it's kind of the same with borrowing money when this whole debt ceiling thing is going on. The Treasury has to like manage its money really carefully, and that can affect U.S. Treasury bonds, those super safe investments.
Right.
So when everybody wants those bonds, the price goes up, just like that TV.
Okay, I get that. But how does that affect, like me and my investments?
So when bond prices go up, the yield they pay, the money you make from them, that actually goes down. It's kind of weird, but because of that, you might see interest rates on other stuff like mortgages go up and down a bit. It might sound strange, but this whole debt ceiling thing can actually be good for some investors, like especially with fixed income investments.
Fixed income. I always thought those were for people who are like almost retired.
Yeah, a lot of people think that because fixed income investments like bonds are good for people who want, that steady income, like if they're retired, but they can also be good for anyone, especially when the market's kind of crazy like it is now. When we have this debt ceiling problem, bond prices change quickly, and that's when you can get a good deal. Like if you do your research, you can buy bonds for less and lock in a good return.
So that's like a sale on bonds.
Exactly. But like with anything, you got to know what you're doing, right?
Yeah.
So do your research, figure out the risks, and maybe even talk to a financial advisor before you do anything big.
That's always good advice. Man, this deep dive has been a lot. We talked about the Fed cutting rates, the job market being kind of weird, that whole thing with the debt ceiling and everything going on around the world. It's a lot, but it's good to know how it all, like, connects to our lives.
Totally. It's easy to just tune out all the financial news because it can be overwhelming. But if you take some time to understand it, you can make smarter choices about your own money.
For sure. So before we wrap up, is there anything you really want people to remember from all of this?
Think about everything we've talked about today. The rate cuts, the stuff happening globally, all of it. Then ask yourself, how could all of this affect my own finances and what I want to do with my money? Are there any changes I should make or things I want to try? It's something to think about.
Definitely a lot to think about. Thanks for explaining it all to us today. And to everyone listening, thanks for sticking with us on this deep dive. Until next time, remember, knowledge is power. Stay curious.